How's everybody? Happy Wednesday. FOMC day. Exciting stuff. How are you all doing? Morning. Why can't I scroll? Sometimes this chat just does not let me scroll. Morning, Danny, JC, Neo, Monkey, Chuck, Senji, Gregors, Neo, George. How are you doing? We just had some news this morning for the UK. The GDP came out as forecast. As you can see, not a massive move on that. I'll have a look at it in a sec, but I got out of my pound New Zealand short from Friday. So I'm out of that. And I've also got out of New Zealand dollar had yesterday. No. I got out of something else this morning. Maybe I didn't. Oh, yeah. New Zealand dollar, US dollar. I got out of that this morning as well. When you get propulsion gaps this big on news, I'm always worried about them piling back into that move. So we've hit it. We've got some bearish price action. We've tried to rally. We've got some bearish price action. It may just fill the gap, but it also may do that. So between the two trades, it's over 0.5% profit. So I've just banked it. No idea where it's going, obviously. But today, obviously, is CPI and FOMC. So with any US dollar pairs, by the end of the day, we could be absolutely anywhere. So what I didn't want to do was the market drop it down by 0.75 of an ADR today before CPI. There's just no point. Just take it. It's there on the table. So bank that. Morning, everybody else. Virginia, Ted, Heffron, Callum. Quick quiz. How does the SIHEA behave if you still have yesterday's hedge on? It won't trade. Because it's got trades open. How it will behave, I don't know. Don't do that. So you can test it in the tester, but I'm pretty sure you just won't you won't take a trade. The idea is it takes a trade, it waits for the outcome of that trade. If you don't have an outcome of the trade because you don't get out at the end of the day, it will just carry that trade over. So don't know. You certainly won't take any new trades at the open because it's already got an open trade. So that won't work. Long on the DAX this morning, long on the FTSE this morning. There's no volume today. I didn't really want to trade this morning, to be honest. I opened the terminal up before I had my breakfast to have a look at some stuff, and I completely forgot to shut it. So we'll see what happens. But there's no volume this morning at all. Dead, this market. It's FOMC day, so it doesn't tend to move a lot. Morning, Nishi. So this morning, as I said, we've had the GDP. We came out as forecast. Month on month, the monthly figure isn't as important as quarterly and annually. So it is what we were expecting. GDP has dropped. That tends to happen when CPI comes down. When inflation drops, we tend to get drops in GDP. It's quite normal. So I don't think the market was particularly shocked by that this morning. So as you can see, with the pound pairs, that's what we got. Yeah, so there's nothing happened off of that. So all the pound pairs basically just a little bit of a knee-jerk reaction, a candle basically, nothing exciting. So that's out of the way. So today is obviously the big day this week. We've got CPI coming out at 1:30. So forecast CPI for the US is month on month to remain the same. We are dropping, core CPI to stay the same. That's the most important one. That's the difference between the core CPI and the CPI. Core CPI is what's deemed to be the most important parts of inflation. So that's the one that we're more interested in, but it obviously is an overall picture. So the month on month, obviously, we are forecasting no change. We're forecasting no change year on year. So basically, what we should see is probably a whipsaw and nothing on CPI. If these numbers come out massively up or down, we will see potentially a fairly big candle put in. But the market isn't going to want to make any long-term commitments on movement or direction until we've had the press conference and confirmation of the rate. The chances of that changing are like 1%. It's not going to happen. So when that comes out at 7 o'clock, again, we'll probably see some kind of whipsaw, maybe a bull candle will form, but shouldn't be more than an ADR because, again, the market is expecting that. It's factored in, i.e. we're flatlined. So what we're waiting for is this press conference at 7:30. We're waiting to see what Powell says and what the Fed say about what is going to happen. And this press conference will, and this statement will include what's happened today. Yeah, because it's all about CPI. If that comes out dramatically different, this is going to change later. So the market's going to do nothing until that comes out. So FOMC day, and we got Macklem speaking as well. FOMC day, what we often see is rotation. Fairly quiet markets because there's nobody wanting to put any large orders into the market in any direction or in any currency because we're waiting to see what is going to happen with the Fed. So as you can see this morning, dead at the moment. Well, the Asian session's been dead. So don't expect much today. It's really a case of just sitting on your hands and waiting for something to happen. But range-bound trades are not bad. If we do get up to well, I've done it already. Yesterday's highs, yesterday's lows, those sorts of levels, you tend to find is really the extremes most of the time if you can get to them. So not a lot really to expect movement-wise today. Overnight news, really not an awful lot. Again, nothing much out of Japan. We've had the PPI figures coming out. They've gone up. Again, another argument for increasing interest rates, which we're going to find out on Friday. Apart from that, there's very little news overnight. Kazakh's been talking this morning. I didn't see anything impactful come out of that. There's your GDP, and your GDP forecasts. That's it. So nothing exciting. Inflation will be at 2% in France next year, even at 1.7. France needs to reduce its deficit, blah, blah, blah. So, yeah, nothing exciting on the news. So this morning really is a dead duck. There's not a lot going on. As you can see by the indices, they're not interested. Yeah. Nobody's interested in anything today. It's kind of day when you work in a bank. You go into the bank and you sit down and you have a sandwich, have a coffee, and you sit there and go, right, wait till 7. Because no one's literally going to make any long-term moves. You're not going to buy a load of stuff or sell a load of stuff when you've no idea whether that will be down there later or up there later. You can get a much better price for it or a much worse price. So again, just no point in ordering anything. So we'll see what happens today, but that's probably what will happen. Occasionally with a CPI number, we do get a move started because the market, if this CPI number comes out, big differences. So if you're looking at sort of 0.2, 0.3 differential, so if we got a 0 or a 0.6, or that came out at 3.6, 3.7, something silly like that, the market will know what the Fed is going to say. Yeah. So they will put that move in earlier as a speculative move. And then when that comes out, then they will add to it. So if this comes out radically different today, we will see a big move. But I suspect it's probably going to come out as it is from what the Fed have said so far. So that's today. Tomorrow, we've got the unemployment rate coming out as well, 2:30 tomorrow morning for the Australian dollar. That is forecast to come down. There's no forecast for the Australian dollar either. So from a moving interest rates perspective, so this is still quite an important number. So we might have some movement tomorrow as well. Of the Australasian pairs, and then obviously PPI tomorrow. So that's today. There's not a lot of point in looking at anything specific really today from an ADR or an RSI perspective because there's no ADRs because the market hasn't moved at all yet. Look at that, euro pound average daily range is 30. It's done 6.9. Yeah, we got things that have moved single figures in the Asian session. Yeah, it's just not going anywhere. So there's no ADRs to look at, no RSIs to look at. Well, there is RSIs to look at, but they're the same ones as yesterday. So it's basically just a case of going through all the pairs today, really, I think. Weekly range hit on Euro New Zealand. So that's the only weekly we've got. It is Wednesday. That's bouncing very nicely at the moment. I'm in the Euro odd. No, I'm not. On my other account, I'm in the Euro odd. I could have sworn I was in one of those on here, but I'm not. Yes, that was right. Yeah, so Euro New Zealand hit there. I'm trading Euro odd because I don't trade both of those. I trade Euro odd, not Euro New Zealand, because Euro odd and Euro New Zealand move pretty much the same. So if you trade both, you're overexposing. So that's the one that I'm not in. But Euro New Zealand, very nice extension there. So it's done its weekly range, but and obviously we've got a nice reversal alert and a retest this morning. So you've also had a 15-minute reversal this morning gone in. So that's a nice looking long potentially for them to pull it back up. But as I say, today, anything you get into is just really going to do that. So there's not much point in going anywhere really today with it. RSI-wise, the only RSIs we've got are these euros. So we know the euro's having a bad time at the moment. Euro CAD stagnated. So I got out of that one on the gap down on Monday. We've come back into the weekly lows. This is a triple weekly low. So we've got the weekly low from last week, the week before, and 3 weeks ago. So there's your 3-week low, your 2-week low, and last week's low. Yeah, the week before low. It's just that's the low at the moment. That's where we are. Yeah, we've also got a gap fill, the gift. It's just a lovely little trade that there's no reason why we shouldn't get that gap filled. But again, nothing's going to happen today until we get CPI and we get everything out of the way with FOMC. So all currencies move on US CPI and all currencies move on FOMC. US dollar is the world's currency. If you want to buy the US dollar, you need to liquidate something else. Yeah, so everything moves on these news events today. So everything stagnates beforehand. So that's extended. Euro pound is very extended on the 4-hour. Still, I'm long Euro pound. Again, just playing the gap fill on that off of the RSI extension from, that was my first entry, was there, which was an hourly extension last week. I'm in 4 now. Yeah. I'm just looking for that gap to fill. The pound didn't really help today. Didn't hinder either. It's done nothing. And the other RSI extension, I think, was the Euro US. Yeah. So that's your other 4-hour. So they're all 4-hour RSI extensions. They're all gap plays. I'm long on that as well. One position from Monday, I think. But obviously, it's just, not gone anywhere this week. Nothing's gone anywhere this week. Dead. Everything's dead. So I'm going to whiz through all the pairs today, but it's probably going to be quite a quick session because there's nothing to talk about. As you can see, nothing much has changed since Monday when I went through the last analysis. So we are very much stuck in a no news, no movement situation until this afternoon. So today, obviously, we've got that news, and then we've got PPI tomorrow, which is, again, the producer index, which feeds into the consumer price index. So that is important. And then we've got the Bank of Japan rates on Friday. So there could be a big move on the yen on Friday as well. So we are getting to the point this afternoon where everything should start to kick off. Although I've said that many times before and we've gone nowhere. So that's just what's happening at the moment. As Virginia just said, the whole market seems to be stagnating. We're waiting for interest rates still. And even though we've had that euro rate drop and we've had that Canadian rate drop, it didn't really do anything, did it? Yeah, this looks like it's important, but this is the interest rate change for the Canadian and the euro. That's what we got. You can look at the euro CAD. Yeah, so we've been waiting for a year for them to decide to do something with interest rates. That's what we got, and that's what we got. This is the cross for both currencies. They both dropped interest rates. All you get. The biggest move this week has been caused by the French parliamentary breakdown. So, last week rather. So yeah, very weird. FOMC later today, so this morning might be quiet. Yeah. If one of you just joined, I've literally just been saying that for the last 10 minutes. Yeah, it will be quiet this morning. The DAX hasn't even broken out of that range. I'm actually going to just cancel all these orders off. It's just no point getting into it today at all. 20 minutes into the market, we haven't even broken out the 5-minute ORB. FTSE has, and I'll be lucky to get 1 hour out of this. Look at the spread as well today. It's just shocking. In fact, I'm just going to take that $100, I think. Pound. Dollars. Pound. Yes, pound. I can't remember what I've got this currency in, this account in. It's just no point today. I'm just going to take that off. So yeah, I just this morning is a case of sitting around and waiting. Any analysis this morning, and also not going to trade the New York session this afternoon at all. Yeah, steering completely clear of New York. You will find if you're going to try and trade the ORB this afternoon, you will probably find you stagnate as well at the open, because you're going to have that CPI number comes out an hour before the New York open. The market will move, all indices will move off CPI, which means that there'll be all the volume entered into the market prior to the market open. So the market open tends to do that or that. Sometimes it will undo that. So you can get a decent break, but most of the time you tend to find it's like this. Because again, you're not going to buy a load of stocks when you don't know what impact the price of that stock is going to be, because the US dollar, which prices all these stocks, is either going to fly or dump, potentially on what FOMC happens in FOMC. So you don't buy stocks before FOMC either. So it's just, today is just about sitting around basically. So not bothering with the session this afternoon either. For New York. So as you can see, the Aussie dollar CAD is pretty much a prime example of what we're seeing at the moment in the market. Nothing. We are literally in the middle of a range. Got out of the H1M5 entry, which was lovely, straight in, straight out. Again, what I said yesterday about 50% retracements on these propulsion gaps. Yeah, so often we hit half this propulsion gap and we never complete it when it's this big. So again, good reason to get out halfway rather than trying to get the gap fill done. But right now we're bang in the middle of nowhere. Yeah, so never take a trade from the middle of a range. Yeah, because the odds are 50-50. At least, well, the odds are always 50-50, but at least if you're at the top of a range, you've got a directional bias and you've got the chances of a load of limit orders helping your trade on its way. So don't trade from the middle of the range. No point. And you probably won't get a signal to trade from the middle of the range anyway, because it'll be in the middle. So yeah, Aussie dollar CAD, dead. So this went dead on 3rd of May. We're now on the 12th of June. Nothing. So untradeable. I say untradeable. There was a short there, which I got out at break even. There was a short there, which I got out with a nice profit. There was a long there, which I got out at break even, but would have made a profit, just about. And that was a nice long there. So we are getting signals, which are working obviously beautifully. As long as something stays in a range, you cannot fail to make money as a mean reversion trader. It's impossible, because if it's in a range, it's going to mean revert. That's the whole principle of mean reversion. So you can't help make money if something stays range bound. So literally longs or shorts, doesn't matter. Aussie Swiss stuck this week. 1, 2, 3, 4, 5, 6, 7 days, nowhere. It's same as this. We are just not going anywhere. We're waiting for news on everything, and the Aussie specifically has no bias short at the moment, because they are them and the New Zealanders are the only people that have said we are not going to be putting our interest rates down at the moment, because inflation is still far too high. So you have to have a bullish stance on the Aussie and the New Zealand because everybody else is saying they're dropping it. If they're dropping it, that makes that bullish. So the interest rate differential for the Aussie and the New Zealand will always be higher. Therefore, it will attract money. It's also a commodity pair. So, yeah, it's got to be a long bias on it. But, you know, if you got in there, you're still in it. If you got in there, you're still in it. If you got in there, you're still in it. Just not going anywhere. So, yeah, longs only at the moment on it. All the yen pairs, again, God, I sound like a broken record. I'm sure I'm on Monday. I'm just basically doing Monday's stream. All the Aussie pairs, we'll do that or that on Friday. It's going to be interesting to see what they do with the interest rates. So interest rate change or not on Friday. Bank of Japan have given us no clue, no indication, no idea what they're doing. Don't think they know what they're doing. The monetary policy statement will probably come out and prove they don't know what they're doing. And when they're asked, they probably won't tell us what they're doing. So we certainly know they are unable now to intervene and have any impact. It failed dramatically and even has devalued the yen on some currencies. New Zealand yen, yeah, it's had a bad effect, not a good effect. So your guess is as good as mine on this. I want to long it because of the swaps. I want to short it because I think that this will have some power coming through because you just can't see it getting any weaker without them going bankrupt. So, don't know. Stuck with the yen. Don't really know what to do with it, so not trading it. And as you can see, if you had longed it or shorted it, you're still in it. You're still in it for the last week or so. And if you started to get into some shorts or anything there, you're still in it. Yeah, it's just going to cost you money to trade it. It's just no point. If you long it, fantastic. But if you're shorting it, it's just going to cost you. You're just not going to make money on any yen pair at the moment unless they do something. So Friday, we'll get some indication. I'm steering clear of it until I know some bias or some mechanism they're going to use to control inflation, which it isn't this at the moment, is it? If you're moving in 0.1 increments, you're not going to get your interest rates to any point that's going to make any impact within the next 2 to 3 years. You'll be bankrupt by then. So, you know, it's just nothing happening on it. So yen's steering clear of. So all the yens basically are just the same. They're all just flatline at the moment. There's a good chance we'll get the opposite interaction on the yen today that we get on the dollar, assuming we get something on the dollar. So there is going to be some movement on this one today. The yen will always move when the dollar moves, but quite how far and how much and, you know, what, very difficult to call at the moment. So steering clear. We're up at highs. So, you know, the temptation is to short this thing at the moment. But that costs you money in swaps all the time. So, tricky. So those are your yens, Aussie, New Zealand. This one at the moment is a nice looking long. We've got this big propulsion move. So these are interest rate and CPI numbers for the New Zealand dollar. We're just doing the inverse to what we did last time. So last time on the New Zealand dollar, they didn't change their interest rates. It rallied like crazy. This time they didn't change their interest rates. It's doing the same thing in the opposite direction because we're just in a whacking great range. There is no fundamental bias to be long or short. So because if you look at this from a kind of Fibonacci perspective, yeah, as we're down here, you're better off doing that. It's literally all it is. Because it could go from here and put in a higher low, but I don't think they'll get a higher high out of it. We're more likely to turn into some kind of weird, contracted, symmetrical triangle wedgie type thing. If it doesn't hold this reversal alert and it comes down, you're just going to scale in as we get down to the lows and get out when it goes back up and fills these propulsion gaps. Look at the propulsion gaps on this. Yeah. That's all it's doing. It's just moving up and down through propulsion moves. Yeah. So there's one there that's just filled. So you've got all these up the top to aim for, but you got that one down the bottom to aim for first. Makes sense to buy it from there, doesn't it? But it may not get down there. That was an interest rate non-change. So At the moment, more long than short. Obviously, you've got RSI signals telling you to do that as well, or conditions. You've got wacky great propulsion gaps to the upside to target, which obviously banks love to get back to. It looks more long than short. Reversal alert, retest, but you've actually got, since that reversal alert last week on the hourly, you've managed to do 43 pips, which is an ADR. So it's done an ADR and then it's pulled back 3/4 of an ADR. That's it. We've had an ADR of movement in a week. We normally do it in a day. We've had it in a week. Just not going anywhere. Aussie US. Range bound as hell. I'm long at the moment. I've been trading this one in either direction and I will continue to do so. There's no bias. The Aussie isn't changing their interest rates. The US aren't changing their interest rates. There's no reason for this to go screaming in one direction at all unless something changes. So long there, short there, short there, long there, short there, long there, short there, and now I'm long. I'll be getting out the top of this propulsion gap, hopefully today. So yeah, trade in either direction on any signal. So RSI extensions, as you can see, you've taken all of those. They've all worked perfectly. ADR extensions to the upside or the downside will be fine as well if it manages to do an ADR. But yeah, we are making lower highs though. So, and lower lows, look. So we are starting to roll over now, which would put you more into a short bias than a long bias. But as long as it uses market structure on its way down, yeah, that's fine. Doesn't matter which way you trade it, does it? We just get out when the pullbacks happen. The beautiful thing about trading the US is obviously news. It has good news and bad news all the time, which means it pushes and pulls all the time. So it's always on the move. Therefore, it's always easy to make money out. Most of the time, unless there's a fundamental shift. And again, today there is a possibility the Fed might come out and say something which upsets the market or pleases the market. They're waiting for the Fed to come out and tell us the interest rates are going to drop. If they say that, this thing's going to take off. If they don't, it's just going to do the same thing as it's been doing, isn't it? You're going to be sitting there for a week or a month or, in fact, a year. Yeah, it's just not going anywhere. So pretty safe to trade at the moment. CAD Swiss. So CAD Swiss, again, we're stuck at the moment. We had this big old rally on the Swissy over the last couple of weeks, and we had that Canadian factoring in the drop in interest rates. So this has been kind of the perfect storm. We've broken out that monthly low, and it looks like it's holding at the moment. So that monthly spike, which was, I think that was a safe haven run. Can't remember what that was, but it is holding. So we've broken that level. There was no propulsion move through it. It just kind of went through it, hit it, tested it. We've tested it again. We've tested it again. We're there right now. If that news comes out on the US dollar as weak today, weak numbers, the CAD's going to drop along with the US, which is going to bring this down. So the obvious course of action on this would be to play it back down into the next support, which is here. This propulsion move here. Yeah. So it's about 150 ADR to the downside. So if you are long on this at the moment, it's going to depend on obviously what the news does this afternoon as to which way it decides to go. But yeah, you may have to scale into a bit more. Lovely propulsion targets to the upside on this, and this collapse has been very, very, very quick. So I think there's a good chance that they will undo a portion of that, but you would expect them to do it by now. And this is the problem with RSI. Every indicator's got a problem. The problem with RSI is you get a signal and then it stagnates and resets. So there's no reason why this can't do that. Obviously, it can do anything it likes. But there's good propulsion targets to the upside to fill. Weakness on the Swiss franc will come when they drop their interest rates again. If they do, we don't know if they will. So at the moment, yes, it looks like it's got good upside, but it's also got good downside. So it's stuck. And again, this is why I'm not trading the Swissy at the moment, because I just do not know what the Swiss plans are. If you don't know what they're going to be doing with interest rates, and there is no reason for them to change interest rates, it's very difficult to have a bias. So you kind of have to go neutral on it, which means that you just use the bias of the other pair. But because it's the Swiss franc, at any point in time, it just takes off for no reason, or rather with a safe haven run. So it's unpredictable, and it's got an unpredictable direction because their interest rates are very low and their inflation figure is way below target. There's absolutely no reason for anything to move at all, but it will at some point. So again, very, very difficult situation at the moment with the Swiss. That will change. When stuff starts to get going, it will change. But right now, it's very hard to predict any directional bias on this at all. But at the moment, it's obviously coming down because the Canadian is dropping. So in theory, you should really be able to take any extension you find on this Swissy. But it could just take off on a safe haven run. Excuse me. And if it takes off on a safe haven run in the direction of the other currency, you are going to get squeezed on it. So it's difficult to call. Euros, obviously bearish bias now that we've dropped rates, although you wouldn't be able to tell it by this chart. So we've got a lovely double bottom or triple bottom, quadruple bottom even coming up here at last month's low. If we're going to stay range bound, that's where we should be. The bias on this one, however, fundamentally is more like that because of the interest rate differentials and the fact that the interest rates are dropping on the euro. So this is more of a short than a long. But the market's not really reacted dramatically with shorts, is it, on the euro? So right now, ADR today could well be your low if it gets through there. So just waiting for some extensions to come up for opportunities on that. We had the extension on the New Zealand dollar this week, but we haven't had it yet on the euro. So might get an opportunity to long this at some point this week, but that will be on a breakout of the monthly low. So we're looking for a false breakout basically to come back up and retest those areas there. Obviously, we've got the gap fill as well, which gives us a good idea of a long bias. The Euro New Zealand obviously is the one very, very similar price action on these two that gets the extension. So there is a long there. So good opportunity for a long. Loads of targets to the upside. There's your gap. So yeah, looks good as a long, but fundamentally it's a short. So you could really get in either direction on it. It's still doing nice market structure on the way down, but I'm short only at the moment on these pairs personally, and I'm staying short only at the moment until we've got FOMC out the way, because obviously the New Zealand dollar is along, the Aussie's along as well. So I'd rather be shorting these pairs, which is what the bias is set to on the EA. Euro CAD, again, that can go in any direction at the moment. It's a short against a short. We've got the gap fill and the propulsion move to the upside. We're down at these lows. We've got tons and tons of support and resistance levels all over the place. So there is just a multitude of places on the way down that this thing could bounce from. So yeah, it looks good either direction. Nice long opportunity at the moment from, when was that? Friday. But that's when I got out of my short, so I haven't triggered into that long. But I'm set short only at the moment. So I think if you want to trade Euro CAD in either direction, you can do. I don't see any problem with that fundamentally. But I'm short only at the moment on all Euro pairs. Euro Swiss, again, same thing, dropping. This is a tricky pair to trade because obviously the relationship between the two. When the euro drops, the Swiss drops. When the Swiss drops, the euro drops. So it takes something quite substantial for them to go out of sync and not be hideously tight range like this. As you can see, quite often takes a number of entries because it just doesn't have normal market movement. So we've had a big drop, euro weakness into the rate drop, Swiss franc strength after that big drop it had on the interest rate drop that we weren't expecting. So long for me at the moment, this one. Much rather be looking for them to push back up into that at some point. You've got a monthly low coming up as well. And you've got this accumulation, which kind of ties in around that monthly low. So there's a good chance of finding some support somewhere down here. and that gap fill obviously on the cards. So, however, fundamentally, it could go either way, but I mean, it's a euro pair, so I'd rather be shorting it. Euro pound, I'm long on at the moment. I got long on this. Is that the first entry? Yeah, it was. So I got long on this at that range low. The euro pound, basically, I don't really mind being in either direction because the pound is going to start to drop interest rates, which is going to weaken the pound, which is going to give the euro the chance to rise. They've already done it, which will mean that it's got a bearish bias. So because this is a bear against a bear, you're going to get so much of that. But it could be a little bit grindy depending on what happens with the speed of drops. So Lagarde seems to be indicating at the moment they're going to miss one, do one, miss one, do one with interest rates. We've got no idea with the pound yet. So at the moment, I'm either way on this. 4 positions on it. Because we got the gap, basically. That's the only reason I've got 4 on this. But yeah, gap fill play at the moment to come and retest these lows. And obviously nicely extended, beautiful divergence. So all got longs going for it at the moment, but we'll see what happens this afternoon. Euro New Zealand I've covered, and Euro US, obviously, anything you get into on this is going to be dictated by what happens this afternoon. I'm long at the moment on Euro US and looking for a push up into the lows of that propulsion gap. What happens with CPI this afternoon? If we get up into here on CPI, i.e. we get a negative number on CPI, I might well just take this off with a very small profit this afternoon, or I might just do a break even on it, because it could well do that, but it could easily do that. So if I get an opportunity, if we get an ADR on it today on CPI, I'll probably get out of it or break even it, one or the other. I'll see what the P&L looks like, but right now, you've got to be bearish on this because the euro are dropping rates and the US are just struggling. They are certainly not bearish. They're certainly not really bullish. They are just neutral. So the stance on this has to be bearish at the moment, especially with what's going on in France. It's not helping. So I've got the long on at the moment, but we'll flip short. I just need to check. Got that set. Only short. I was just checking that because that was a manual entry. So the reason I checked that is because I'm not, in theory, that shouldn't get into an extra position because that was a manual entry. So be interesting to see what that does because I've got it set to, I suddenly realized I got it set to short only and it's longed it, obviously. So I have to check that. Keep an eye on that one. Pound odd. So all pound pairs at the moment, afternoon, morning, even Franco. All pound pairs at the moment are neutral stance because we are waiting for the drop or the announcement of the drop from Bailey. So at some point soon, we will get some indication of which direction and when with the interest rates. We obviously know it's going to be down, but when. So the problem with the pound at the moment is we've now got this election called on the 4th of July. So the interest rate change is happening next week, or rather not. So the forecast is for a 5.25 is to remain the same. That forecast may well change and that rate may well change next week because the Bank of England will be obviously talking to the government and the government will be bending over backwards to get interest rates dropped before the election because that's good for us. Brings our mortgages down, which wins your vote. So it's hit and miss as whether they will do a drop. They said they're not going to do it in June, July, August, maybe. but there'll be pressure on the Bank of England. So it will be interesting to see what happens next week. I want to see what that forecast number comes out at. For now, it's got to be slightly more bearish than bullish, just purely because of expecting that to come down and not expecting that to come down with a pound odd. As you can see, this is what we spend the vast majority of our time doing, waiting for a news event, to spend the vast majority of our time doing this, to wait for a news event. Yeah. So you will be in stuff for ages, but it's shorts more than longs for me on that at the moment. But equally, I'll take anything really on it. Pound CAD, stuck in this at the moment. Again, bias on this one. Got stuffed by the Canadian dollar drop. So at the moment, I'm wrong bias on it. But as you can see, from when I got into this middle of May, we literally have done one grindy week and nothing at all. We've had a news event. That's it. So I just can't get out because I'm stuck. So it's just hemorrhaging drawdown control at the moment, which is fine. 175 ADR to the downside. So if the US dollar gets positive CPI numbers this afternoon, the Canadian will pump, and that will drop. Next week, there's a good chance we'll be down here. If they drop those interest rates this next week, I'm moving TPs down here somewhere. Yeah, the pound is going to go because we're not expecting it. The market will have to factor in, oh crap, we're going early, guys. We need to get out of this pound position. So there's very good short bias on it. It's just the market's not allowing any movement on it at the moment. It's just being constricted. So nothing I can do about that. So I'm short from there. And I'm still short. So 1, 2, 3, 4, 5 on. This one here, quite a big distance between those two. But there's nothing I can do about it. It's just stuck. So waiting. And I will continue to get out of the position, obviously, if it continues to go. So, but yeah, shorts. And same with the Swissy. Rather be short than long. But I think there's a good chance it might pull back on this. But, you know, it literally has got 4 or 5 days to do what it's going to do. Because next week we've got the interest rate change on the pound, or not. We don't know yet. You know, look at a week's worth of movement, extrapolate that up here. We're just going to assume it's going to do the same as it normally does in a week if there's no news events. And we may well be up here by the time we get the news. Nothing much else you can say about it, is there, really? It's not going anywhere. Pound New Zealand, just got out of all the longs on it. I got out of the short on it this morning. Again, we hit the top of that propulsion gap. You can see why I got out of this morning. I opened the charts this morning, looked at it and was like, yeah, you're not going through there, are you? Oh. Yeah. These propulsion gaps, when they're big like this, they will often prop price up. This is a large bank order, which was added to. Yeah. When price gets back here, they do not want you to go through there because they're long. Yeah, this is why propulsion gaps work. These are large bank orders. If a bank is long and it wants to stay long, it will add to keep it long. Yeah. So this is why I say, you know, half of it to the top half, that's where you find the bulk of the money, which is going to be added into those positions. So out of that one, you know, absolutely anything can happen today. CPI, it doesn't matter how big that order is and how big the iceberg sitting there is. If the market needs to drive this the other way because it wants to sell all the pound to drive it into the US dollar for any reason, these guys are just going to flip short and go with the crowd. So, you know, that's why propulsion gaps get filled equally. Yeah. But that's why they get held as well. So it's all driven by news. We can see where the banks are, but when we get there, we still don't know what's going to happen. But so right now, the bias on this one is definitely a short because the interest rates are coming down on this. The interest rates are potentially going up again on the New Zealand dollar. I find it very hard to believe they'll do that, but they have indicated they may need another 0.25%. So if that happens, the bias is short. Yeah. And as you can see, I got into a long there and managed to get out of it with a nice profit eventually. But it's a struggle, when the fundamentals change. So much rather be short than long at the moment, but equally, news will send this where it's going to send it. So we'll wait and see, but nothing much to do on that one at the moment. Pound US dollar, again, same thing. I've got a buy on at the moment, which is in profit. I'm just going to protect that actually, because there's absolutely no point in taking any risk on a US dollar trade today. So we'll either get target hit on that today, which is propulsion, or it won't. So I'm going to stop out, break even on it, or I'll get it. But bias, any US dollar today, bias could easily change today. So right now, it's turning into a sell because of what's going to happen with the pound. But we don't know what's going to happen with the dollar. If the inflation figures today come out dramatically lower than forecast, the Fed are going to be able to turn around and go, do you know what? We're going to go July, August. And this thing will go through the roof. Yeah. And then Bailey will come out next week and drop the interest rates. And then this thing will collapse back down again. Yeah. So you have no way of knowing where this is going. Right now it's doing this because the market has no way of knowing where this is going. So right now it's a short or a long, doesn't matter. But this afternoon and next week completely change. So I'm long at the moment, but obviously protected with that. New Zealand CAD got out of those shorts on Friday, finally, after taking a load of drawdown control. So came out of that trade about 5.5 grand down. So about 6% or something like that overall. Got out of the long yesterday on that one as well, because again we hit that propulsion gap. Just worried about these moves at the moment being continuations. So this will change bias this afternoon. Obviously the Canadian will move with the US. If the US has a dramatic change in direction, then obviously that will as well. But the bias on it is long. So, you can see it's obviously driven because the New Zealand dollar is not going to be dropping its interest rates anytime soon. The CAD has already done that. So the bias needs to remain in that direction this morning. This afternoon, it could be different. But right now, that is the bias to do longs. But, this is the beauty of position trading. Even if there is a bias in that direction, if you want to go in that direction only, go in that direction only. But it goes in the direction like this. It doesn't go parabolic most of the time. So there's always opportunities to trade in both directions. It's just at the moment we're getting that. Now, this is the first time looks like we've got some market structure starting, because we've got some news starting that's actually starting to move the market. But these pushes on news and accumulations is all we've seen. The old market structures not been there, is it? So hopefully that's going to come back in now. But at the moment, it's more of a long than a short. Same with the Swissy, more of a long than a short. We have got all these propulsion gaps to target to the downside. We've got upside propulsion gaps to target as well. But I'd rather be doing that than doing that based on New Zealand dollar bias. However, the New Zealand dollar will get tired after it's moved and it will start to come back down again. The Swissy, not a clue. So not trading the Swiss personally. New Zealand US, again, today that bias is going to change. So I got out of all the shorts on that last week on the non-farm payroll. I longed it, got out of the long yesterday on that, or this morning rather. Got out along that this morning at the propulsion. So yeah. Bias right now is that. Because it's a long against a neutral stroke long. It's all going to change today, possibly, or it might be the same. We'll have a look tomorrow. But right now it's very difficult. You should be able to trade this in either direction. But again, it's the same old story. This New Zealand dollar specifically is absolutely useless. Just going through the massive periods of accumulation, stagnation after news. That's all it's doing. So we've got some proper movement starting, but whether or not the market can continue this, we don't know. And the trouble is, just as we get the market moving on interest rates, we're going into summer trading for 6 weeks, and it all slows down. So be interesting to see what happens in July. But US dollar CAD, longs and shorts, don't care. At the moment, I'm short. If it pops today and we get a change in direction, I'll be looking at a monthly high drop. We've got that monthly high working at the moment. Limit orders on that. Limit orders triggering off at the lows of the previous month. So it's just range bound at the moment. I've been trading this thing for the last 2 months, up and down, up and down, up and down, constantly just making money out of it. So at the moment, I'm short. I'm hoping that the CPI number comes out as a negative so I can get that target hit, and then in FOMC, they can do what they like. But if it pushes, obviously, I need to scale into another position, which would be above ADR today. But at the moment, the bias on this is neutral. If the US gets negative numbers and that becomes bearish, you've got a bear against a bear, which gives you neutrality and range. So it doesn't really matter with this one which way you trade it. I've done my testing analysis that I've done on the US dollar CAD. It's interesting because I've been testing a few strategies recently with big system parameter permutation tests. The US dollar CAD is one of those that comes out. It never makes a load of money, but it never makes a load of loss. It just generates cash quite easily a lot of the time because it's always on the move. Because whenever you get any movement on the US dollar, the Canadian tends to go with it. But when that US dollar move stops, the Canadian tends to undo it all the time. It's a really good moving pair. It's not got the biggest range. But it's always on the move. So from a mean reversion perspective, it's an absolute goldmine. Fantastic. And all my testing shows that the US dollar CAD is one of the top performing pairs for stability. So I'm finding out lots of things doing lots of testing at the moment. And this one is a dream. And we know it's a dream because we've been trading it like that for ages. It's also massively impacted by commodity prices, specifically oil, because they're both large oil exporters. Oil is the largest export from Canada. So oil price moves it up and down. So the US moves it up and down. The stock market moves it up and down. Oil moves it up and down. And any commodity rallies move it up and down. Yeah. As well as them being close trade partners and wanting to keep the price very stable, which moves it up and down within a range all the time. So it's just a perfect storm, isn't it? The sort of thing you want to trade all the time. But you obviously using signals. But you can see on the chart here, it's just lovely. You just longed it, shorted it, longed it, shorting it now. Yeah. It's just, one of those you just stay in and do whatever, whichever direction, doesn't matter. US dollar Swiss, again, I'm not trading Swissy at the moment myself. Bias on this, no idea. You can see obviously the non-farm payroll propulsion move from Friday went straight into the previous news, which was a range break below 2 monthly lows, which seems to be holding at the moment. But right now you've got 3 or 4 hours and this thing will be gone wherever it's gone. Yeah, it's all going to be US dollar. I suspect what you'll probably find is you'll do something like that. But we will see. Unless the Fed says anything catastrophic this afternoon, no real bias on this. The Swissy is slightly bearish. The US is neutral, slightly bearish. They both are moving up and down a fair amount. But, it's just one of those things that it's all moved by news. So difficult to tell which way this one's going at all. So in theory, you should be able to take extensions in either direction, but obviously just bear in mind the Swiss is a safe haven currency, so it will get pummeled on a regular basis. It will get loads driven into it and loads pulled out of it at a moment's notice. So it's erratic. US dollar yen we've covered. No clue. Stop. Are you always using H1 when finding propulsion gaps? Yeah, because that's the time frame I'm trading. So I'm trading H1. So H1M5. If I was trading H4M15, I'd be using 4-hour propulsion gaps. But to be honest, I prefer the hourly propulsion gaps. 4-hour propulsion gaps can be formed by, I mean, a lot of it's all, I mean, that's an intervention. So this is probably not the best pair to look at. But 4-hour propulsion gaps you'll find are often formed by news as well. But the thing with the 4-hour chart is because it's a lot slower, a multi-day rally will just show you propulsion after propulsion after propulsion. Yeah. So I find it a lot more difficult to use for propulsion moves for identifying orders. We're looking for big orders that have been put into the market. These can be caused by just large movements over periods of days. Yeah. So you've really only got 3 proper 4-hour candles in a day that you are interested in. Maybe 4. There's an argument for 4, really. But you got 2 London, a London and New York, and the tail end of New York. Yeah, so there's only 4 candles really that give you the movement. Australasian session, unless it's an Aussie or New Zealand dollar pair, are just going to be accumulation, building a book ready to pass to New York for the New York, pass to London, so that London can drive the price somewhere. So this is more indicative of large orders over a period of time, over an hour. So what the banks and institutions do, if they've got a large order of 20 million or whatever to place into the market, and normally bigger than that, but let's say 200 million, they'll break it down into small, 500k chunks, and they will pop 500k in, wait for the market to pull back, pop the next 500 until they've filled the order. Yeah. And as they're doing that, price pushes. Yeah. This is what you see on a 5-minute chart when you go, oh, look at that beautiful trend. Just the banks just placing the order, and getting the best price they can, because they can't dump it all at once, because there's not going to be enough people to sell. Yeah, if you've got 200 million to dump long, you need someone going 200 million short. Otherwise, you're going to make a huge candlestick, whatever, price movement over time. So it's easier to identify orders, and these are the places where other parties will be caught offside, which is why we return to them and often come out of them. Yeah. It's the banks basically returning to those levels, adding more volume. Yeah. Or banks getting back to those levels, completing unfinished business, being caught offside, exiting those positions, stopping the pressure, which releases the other guys to push it back the other way. This is why we quite often get reactions at those points. Look. Just the way the market works. It's just banks moving price around, filling orders. Everybody's always looking for the complexity in this market and in Forex and in anything really. But it's really simple. A bank is just a business that has a job to do. Someone comes along from a corporation and says, I need to change a load of euros into Australian dollar, please. How much? 350 million. No problem. When would you like it done by? I'd like it done within 24 hours if that's possible. Yes. What price would you like? I'm not worried, but as best you can possibly get for me. Okay. Well, let's chop this 350 million up into sizes we can get. There's 25 million there. We'll have that. Here comes another 50. We'll have that, which is why people refer to them as iceberg orders. Yeah. There's a big order sitting there. When we get back there, everybody that's selling, they just buy the lot because they've got so much of it they've got to get rid of. No one's going to get through there until that guy has got rid of that order. That's the way it works. It's not complicated. It's just business. It's what banks do. Their job is to go up and down with price to get orders filled. And if they can't fill an order here for someone and they can fill it there, they will move price. Market makers, the people that make this market, will move price to the place that they can complete the transaction. Just orders doing business. You can see it better on an hourly chart because business is conducted intraday, which is why we have an average daily range of an instrument, because there is an average amount of money that needs to be transacted on a daily basis. Yeah, that's all it is. It's just simple logic. Banks and institutions get a certain amount of transactions to do a day. They have to move the market a certain amount of distance to complete those transactions, which gives us the average range the instrument tends to move on a normal day. If it goes beyond that range on a normal day, there's been a bigger order or some kind of change in market condition that means that we need to now conduct price at different points in the price ladder, basically. That's all it is, which is what the banks tend to call price discovery. So they're looking to see if they can transact. So that's the last point we could transact at. We couldn't get through that level. So let's see if we can transact lower. No, we can't. All right. Well, let's carry on doing what we did before. Can we go lower yet? Oh, no, we can't. What about now? Yes, we can. And it will stop at the next point where someone doesn't want to let the market go below a level, and they will just buy that level up. And then you'll go, screw it, we can't get through there. Let's get out and flip with this guy because this guy is going that way. So that's literally all that happens in banks. It's really simple. It's not rocket science at all. And all these systems and strategies that are looking for the mechanics of this random thing are never going to make it, because you can't predict what's going to happen. When it gets to this level, either that guy has got more or he hasn't. If he hasn't, it's going that way. If he has, it's going that way. The odds are the same every single time it gets to that level. Yeah, it will or it won't. And there's nothing you can do about it. The only thing you've got is risk and price. And if you're a position trader, you've also got price, which is the beauty of position trading. Because if it gets to there and you go like that and it moves down, you can go like that again and change your price from there to there so that when it bounces from there, you can exit. But if you know where the orders are likely to be heading, you have an edge. But that edge is never going to be right. You know, back here, we thought, hey, look, we're probably going to head up there. We didn't. So we made more propulsion gaps on the way down, but we did hit those. So when you get in long here and aim for that, and it doesn't get there and drops below that level, you add another position and move your price down to here. Now you've got a propulsion gap target here, which by scaling in, you could get out at. But you could have also got out of that one or that one. Yeah, it's going to head to there. And if it doesn't head to there, it will scream down, make a propulsion gap, and you will change your price and get out at the next propulsion gap, which is why my targets are always at propulsion gaps. Yeah. That is the last propulsion gap to the downside. That one's filled, but it's gapped, so it's not filled. That is a whacking great target. If you're going long right now, your target is either there, not there, because that is actually filled. I've gone through it. But you have got a target there because that is a whacking great gap, look. An actual proper gap. But your target should always be where the banks and institutions are conducting business. Because that's where they go. This is why we have this indicator. This indicator is the Holy Grail. It shows you where the banks are conducting business. So if you know where they're conducting business, you know where it's going. You don't know which, you don't know when, but you know where. And if it becomes invalid because it pushes too far away, they will set another target. This is a prime example, this one, look. Big shooting up, propulsion. Big shoot up, propulsion. Big shoot up, propulsion. Added. Yeah, okay, I'm going to short it and I'm going to attempt to get there. Pushed up further. Okay, didn't manage to get there. So I'm going to add another position, change my price. Now I'm going to target this one or this one. But because my initial entry was here, that wasn't enough money. By adding my second entry there and moving my price here, that is now enough money. Doesn't matter which you choose, you just choose the one that's closest. That's going to give you an opportunity to get out with a profit. Target that. Short. Didn't quite get to it. Damn, we pushed up. Let's go short again. There's another propulsion gap, but my average is there. That's no good. So by the time we get up to there, we'll target that propulsion gap. So you got in, you got in, you got in. Your average was there. Propulsion gap target was that one. We decided to change it to that one because it's below our average price. Out. Simples. But timing, impossible. Distance, impossible. You have no way of timing the market. You have no way of knowing how far the market's going to go. But you know where it's been. That's all you got on your side. You just control risk to get there. Morning, Grateful Buster. Morning, Big Les. CAD retraces all the time. Yeah. Yeah. It's oil. Oil helps it because the beautiful thing about commodity pairs is you've got oil news every week. Therefore, there's always a different stance on oil. So oil is always moving somewhere. But also the currency is moving somewhere, inflation is moving somewhere, interest rates are moving somewhere. You've got so many factors that move those pairs. It's lovely. Same with the Euro CAD. Yeah, it moves up and down. Look at it. It's beautiful, isn't it? Look, boing, 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 boing. We've got things like the New Zealand dollar just going nowhere all the time. And then you've got things like the Euro CAD or the Canadian dollar, which is just all over the place. Brilliant, isn't it? CAD's amazing. As long as we don't stop using oil, then it'll become crap. I feel like a carpenter. I hear buzzsaws all day. You've been drinking, Franco. I know it's late at night where you are. I feel like a carpenter. I hear buzzsaws all day. I don't know what you mean. Would you have blown an account if you were long Euro Swiss when it depegged in 2026? Right, first of all, that's the future. Are you from the future, Heffron? Is the Euro Swiss isn't pegged for a start? Even with stops in place. Do you mean 2026? Would you have blown an account if you were long Euro Swiss when it depegged? Yeah. Well, I don't know. Depends if you had. I mean, yeah. I can't answer that, can I? Did your broker honour your stops or not? Did your broker go bust? Did you have negative account balance protection with your broker? I can't answer that question. If you're talking about the Swiss franc peg removal, that was 2014. And whether you went bust depends on whether your broker went bust. So if you were long there and you had a stop loss there, no, that would not have got honoured. Talking about trading, just getting dizzy with trading conditions. Yeah. Okay, I get you now. Yeah, I don't you know. It's only ever happened once. Yeah, I mean, if you were long on that, in theory, you blew your account whether you had a stop loss in place or not. I had stops in place on my trades and I had TPs in place on my trades. Nothing got honoured because the market froze. The market stopped. Nothing got placed. There was no liquidity. This is why this candle has done this. Yeah, liquidity was removed from the market. There was no liquidity available to fill any orders. Yeah, trading just stopped. The world, it's like the black hole. Yeah, it was like the Big Bang. Yeah, everyone was like, what the hell? No one survived. No one can survive because, and this is what the mess was afterwards. My account on the Swiss franc peg removal got put into escrow with the Financial Conduct Authority in the UK because my broker, Alpara UK, went bust within seconds. Literally, they were in business. They were out of business. My charts froze. I didn't see this because it didn't paint. Because the terminals froze. Everything froze. Everything stopped. And everyone was like, oh, onto support, onto the chat system. What do you mean I'm 650th in line? That's got to be a mistake. No, everybody was panicking. My P&L still showed open orders. Yep. So what had to happen was the auditors came in and you had to prove you had positions open where everything was. So I took a screenshot. I don't know now, but I took a screenshot of my charts at the time, my P&L, my open orders, everything, because I knew I had to prove that something was going on. If you were long here without a stop or with a stop, and you did not have negative balance protection when that happened with your broker, in theory, your broker could come after you and say, you owe us £2.5 million or whatever you're going to draw down by. Luckily, if you'd have left it, it would have come back. But you'd be in negative equity. You'd be in a margin call situation, wouldn't you? Yeah, don't know. I was in the right direction on it, but I didn't get paid on that either, you know. So in theory, think about it. I was short on this at the time because the cap was 1. We were above the cap. So everyone was like, if you looked at any sentiment chart at the time, 100% of the market was short. Yeah, because there was a cap here. Yeah, that was the cap, right? So you go back and look at that orange line. Yeah, we didn't go above that orange line for 4 years. And if we did, we came down pretty quick. So that was where the peg was, which they put in place previously. And they decided just to stop it. So everyone was shorting at that level. So anyone that was shorting it didn't make money because your broker couldn't complete the order. You said to them, I want you to buy it here for me. They couldn't buy it because there was no one available. Just one of those. This is the black swan. Yeah, this is the only one that's ever happened in my lifetime. Everyone worries about black swans, and a question I used to get asked when I started doing the bootcamp and the initial live streams, always asked, well, aren't you worried about black swans? I've only had one. I've been trading 16 years. There it is. It's never happened again. And everyone's like, well, what about the 2018 market crash? Yeah, well, that happened over days and weeks. Yeah, it's not something that happened, you know, that was a black swan. Yeah, COVID. Yeah, it's not a black swan. It's a 2-week sell-off, V-shaped recovery. It's not a black swan. Black swans go collapse. Yeah, that's a black swan if you don't do something about it. But you did do something about it. I hedged the market. But not because I knew what was coming, because I didn't know what was coming. You stop. You go, what the hell's going to happen here? We've never had... What do you mean Italy's shut? Shut? They don't shut countries. No, Italy's shut. Shit. You stop. Yeah, you get warnings about stuff like this. You know, Lehman Brothers Bank has gone bust because they've been buying dodgy mortgages. Stop. What impact is this going to have on the market? Okay, I'm in 7.5% of drawdown. I'll have that. Take it. Yeah. It's very rare you're going to get an instance where it's going to go really badly wrong. Things like changing interest rates without warning. Swiss. Again, Swiss. Tell you what, we're going to put our interest rates up. What do you mean you're going to put your interest rates up? You've never put your interest rates up. No, but we are today. Sorry, we didn't give you any warning. I'm sorry about that peg removal as well. Sorry, we didn't tell you about that either. You know what I mean about the Swiss? They just do stuff. Yeah. We're going to drop our interest rates again. What do you mean you're going to drop your interest rates again? You didn't tell us we were doing that. Now you know. That's what they do. They're a nightmare. So just be warned. That's why a lot of people don't trade it. Personally, I've made a load of money out of it, but I've also got squeezed. Some of my hardest squeezes, US dollar Swiss, December 2000 and 21, maybe even 22. Just remember it. It's the squeeze from hell. We're expecting a Santa rally. We didn't get it. At the same time, the Swiss franc powered up. US dollar Swiss collapsed for over a month at a point where it should have been rallying like crazy. Swiss did it. They're a pain in the backside. Sorry if you're Swiss. They do have a very good banking system, though, which is why everybody puts their money there, because they are all rich. They have no problems with unemployment. They have no problems with inflation, as you can see. Yeah. Everybody's got a job. Prices are stable. You don't earn a lot of money, but your mortgage costs you nothing. The only problem is a bottle of wine will cost you 15 quid. If you don't drink, it doesn't matter. Right, that's what I got today. So we're waiting for the news. It's just a case of waiting and seeing what happens basically today. So every FOMC and CPI that we've had for the last 12 months has been a letdown. It could well be exactly the same. If you want to go back and look at what happens on these days, if you just go and have a look at the numbers and the dates, go and look at the 15th of May, the 10th of April, the 12th of March, the 13th of February. Yeah, go and look at the price action around those days. There's big days. And look at the FOMC statement, press conference. So the press conferences are the ones that you're interested in. May the 1st, March the 20th, January the 31st, etc., etc. So the press conference ones are the one where we get much more guidance. The normal fund rate, we know, hasn't changed forever. Yeah, it seems like forever, doesn't it? July 26. July 23. Yeah. So it's a year, pretty much. It's a year since we've changed rates. So the rate isn't going to really make an impact unless they change it, which they won't. And if they do, I won't be the only one that's surprised. So would everyone else. But yeah, so go and have a look at history and it will show you what happens. Sometimes it does that. Sometimes it does that. Sometimes it does that. But very rarely will it take off and go from there, because there's no reason unless it shifts, which it hasn't done for a long time. So, but at any point, we will get a shift. And it will change the way that we look at the Fed and the US dollar, and the market will start to go. So it can be today. You just got to be wary of it. Any profit you've got in your P&L, if you've got open P&L on US dollar, I'm 4 short at the moment. So if you've got anything in profit, like my pound US dollar, my Aussie dollar US dollar, got nothing on Euro US, and I've got a US dollar CAD in profit as well. So those green numbers there, yeah, you can put those in your P&L. Happy days. If they turn greener, well, you could have made more money. If they turn red, you can't get that back. Yeah, I can take that and spend it. If it goes red, I can't. So it's always worth taking it off. Or if you want to, like I'm doing with the pound US dollar, protect it. Yeah. So I've got a trade on long. It's at break even. So worst case scenario, I'm going to take a small loss, because if I manage to get my break even stop, fantastic, but I'll probably get slipped by my broker and I won't get the exact price, but I'll get out roughly at break even. If it flies, and again, that TP there, go for a bit more. 125 ADR, for example, on it. Yeah. So if it flies, yeah, it's going to hit a brick wall when it gets here, because this is where the limit orders are that are shorting the market at the moment. It's going to hit trouble unless it's a massive fundamental shift. So, yeah, so, just at least protect any money that you've got, even if it's not that one position. So that other trade I've got on the Euro US dollar, US dollar CAD, sorry. So I've got 2 positions on this one at the moment. TP is there within ADR. And again, go for a bit more in case it does collapse. But this one here, I can stick a break even on that. And then if it flies through it, I don't go into drawdown on that, and I can add the position back on at a better price, move my average up further. Yeah. So just think about what outcomes are going to happen. It's either going to do that, or it's going to do that, or it's going to do that. Yeah. If it does that, brilliant. If it does that, don't want to be in drawdown on that. There's no reason to go into drawdown. But I've only got 2 on it, so it's not the end of the world. Yeah, so just have a think about what you've got on US. And also everything, everything will move on FOMC stuff as well. What part of the UK am I from? South. He lives on a Dutch barge on the river. Yeah. Got to keep moving. Got to keep out of the way of the banks. They're chasing me all the time. Cameras everywhere. It's funny, isn't it? Because they know where my stops are. We know that because every time I get stopped out, the market turns in the other direction. So they are definitely watching me. 47 people in here. 10 of them are banks. Guarantee it. If only they knew I existed. So that's all I've got today, really. Don't bother with the indices this afternoon. You can if you want to, but it's going to be a very tricky one this afternoon for indices. You got news coming out an hour before market opens, so it's going to be a hectic one. We'll look at tomorrow. We'll look at where everything's gone. So tomorrow afternoon, I'm streaming at 2:15, I think. Yeah, 2:15. So trade the New York Open and basically do a complete recap of CPI, FOMC. Have a look at the Aussie unemployment rate. We'll have had PPI out by then as well. If that has caused a big movement and the unemployment claims, if we've got like an ADR hit off the back of that news tomorrow, I won't trade the indices. I'll come on, but I won't actually trade them because if we've got an ADR hit before the market opens, it's just not got any volume usually. Sometimes it will undo, but a lot of the time it will just go at the open because it's just got nothing left. So I will be on tomorrow afternoon and we'll obviously have a look at all of this and see what impact it's had. And if we've actually got any guidance on the US, whether we know where it's going or have any indication from the Fed. But we will see. I'll be back. I'll be in Telegram and Discord. So if you want to discuss anything to do with what happens in the news today, I will be around in there. But other than that, good luck. Lock in the profit if you got it, because it may disappear. We'll have a look at it all tomorrow. Have a good day. I will see you in Telegram or Discord if you need me.